So this is a very bullish, but you do expect these gaps to fill, especially since it seems as though this gap and go is a result of the news over the weekend when the markets were closed from Treasury Secretary Scott Bessent saying that the negotiations between the United States and China on the trade stuff have been going extremely well. He expects there to be a deal when Xi and Trump meet on the 30th. So that's this week. So we've got a lot of stuff going on this week. We got Trump and Xi meeting. Potentially, there will be some type of trade deal. Let me bring it back on over to the report. We've got all of the Fed items. So quantitative tightening is expected to end this week. We're going to get another rate cut of 25 bips this week. Um, so QT ending, another rate cut. The path of rate cuts seems to be, more, more cowbell, more rate cuts. So another cut is expected in December. There are even further cuts expected in 2026. And it looks as though the trade negotiations are working out in the United States' favor. So, a lot of reasons to be bullish, and the market is telegraphing to us that, hey, a gap and go, on the futures open on Sunday, quite constructive. Okay, so and this is also very constructive sentiment. So that sentiment survey, the AAII sentiment survey, I really do think that it's partisan because I don't see how you can look at markets like this and not be a bull unless you hate Trump. If that makes sense then. So sentiment is still cautious. And look, there are fundamental reasons outside of disliking Trump to be cautious. But, sentiment cautious with markets at all-time highs as the Fed is about to engage in a massive easing cycle and NQT. I think being cautious here is the wrong stance. And this is definitely a favorable for risk assets into year end. So cautious sentiment with $7 trillion in money markets sitting on the sidelines as the Fed is about to, aggressively cut rates, and it looks like all these trade deals are working out. So, number go up. Um, let's see,
And
financial condition.
according
Mhm.
according to the Fed minutes, Marty Party was saying the easing cycle begins today. Like October 27 is when the easing cycle begins, according to the Fed minutes.
Yeah, here, let me just bring up FedWatch real quick. Now, I didn't read the minutes. Um, didn't they release like the beige book and the minutes
Yeah.
recently? Yeah, I didn't read that. But just taking a look at FedWatch, I mean, look, a cut this week is priced, and a cut in December is also priced. So whether it starts now, today, or it starts in 3 days' time or in 2 days' time, I mean, it's begun. I agree.
I'm talking the balance sheet reduction,
The end of QT. That
yeah, yeah.
ended today?
It's today, yeah, and the expectation is $1.5 trillion equivalent of an injection by the Fed, according to the post that Patty Marty did. And he said examining this in the recent minutes of the Fed begins of October.
Yes. Yeah, no, Ramsey, look, thanks for bringing that up, man. I 100% not only do I agree with everything you just said, obviously, but I think it's just the tip of the iceberg. I think the 1.5 trillion in easing from the Fed is just the very beginning because, when you read what Jamie Dimon has been saying about the SLR and what they're going to do when that is ended, that could even end at this meeting. The SLR could be uh, I don't know if the right terminology would be ended, but basically what they're going to do is supplemental leverage ratio means that these banks, the bulge bracket banks, need to hold a certain amount of US treasuries on their balance sheets. They can only take out so much leverage against those treasuries. But removing the SLR means that they can essentially borrow at the Fed window for next to zero and then buy infinite treasuries and then keep those on their balance sheets as collateral. So what Diamond is talking about is he wants to restart American manufacturing because he's been expressing concern about the United States' ability to manufacture weapons at scale to defend itself. He believes that that is no longer something that the United States is capable of doing, and he wants to rectify that. And so when Diamond and JP Morgan inject the number that I saw was 1.5 trillion, well, all the other banks are going to follow suit. You know, Citi and Wells Fargo and B of A, et cetera, et cetera, et cetera. They're all going to do the same thing. And you know, that is US dollar liquidity positive. And that's to say nothing of what the speculation has been around Fannie and Freddie. That would be an additional multiple trillions of dollars of added US dollar liquidity. So, yeah, number go up. Also, in the last couple months of this year, the corporate buyback window opens back up again. So that blackout period is ending soon, and there's greater than $1 trillion in buyback authorizations. Now, I don't know if that's through the end of this year, but the Goldman analysts that I was reading over the weekend, they're saying that they expect those authorizations to be filled. And so what that means is there's a bid under the S&P and the Nasdaq now from corporates buying back their own shares. So that window, that blackout window is ending. Um, and we were talking about the Fed on track to cut. Also, digital assets. So we've been talking a lot about Bitcoin in gold terms. And look, here we go. So I'm going to zoom out here. This is, I think, an hourly. This is a 4 hour. But Bitcoin found support and is bouncing. Let's zoom out to a daily. And this is shaking up to be one nice looking V-shaped bottom here for Bitcoin in gold terms. Let's zoom out even further to a weekly. So the level that Bitcoin needs to reclaim in gold terms is right there, 36. We get above 36, and then this head and shoulders pattern will be invalidated. Now, if we just check in on gold real quick, gold is clinging to the $4,000 level. I think that if gold consolidates a little bit further and chops around $4,000, I mean, look, I'm a Bitcoin bull. I would like to see continued rotation out of gold and into digital gold, Bitcoin. And the way that we track that is just by taking a look at BTC in gold terms here. So I'm watching this chart very, very closely. But Bitcoin has performed quite well year to date. You know, yeah, a lot of volatility. But these DATs, these digital asset treasury companies, they are just gobbling up, Bitcoin, Ethereum, Solana, ENA, Hype, Doge, uh, Aether. You know, I'm just listing off all of the digital assets that I'm aware of DATs buying. There's a lot of them. So these DATs are, gobbling up these digital assets and have purchased $117 billion, or their holdings are worth $117 billion right now. So, that is a significant source of demand. Yeah, and I do agree that the bias is to the upside, as positioning is light, flows are supportive with the authorizations for further buybacks, that blackout period ending, so buyback window opening up, and earnings. S&P 500 names, it's like 85% of them have beaten their estimates so far this earnings season. So things are looking quite positive. Um, Market positioning, contrarian setup. Okay, so breadth. So B of A is highlighting here that breadth needs to improve from here. There's a lot of market concentration still in the AI names, in the momentum names, especially the niches where the U.S. government has been taking stakes recently. So think mining and energy and quantum and AI and chips, those niches. We need to see breadth expand. And the easiest way to track that is by watching the Russell. So RTY is Russell Futures, or you could take a look at the cash index RUT, um, or you could just watch IWM, the ETF.